On behalf of Kotak Institutional Equities, I welcome you all to Bajaj Corp's 2Q FY19 earnings call. We have with us senior management of the company represented by Mr. Sumit Malhotra, Managing Director, Mr. Sandeep Verma, President Sales and Marketing, Mr. Dilip Malu, Chief Financial Officer, and Mr. Kushal Maheshwari, Head Treasury. I would now like to hand over the call to Mr. Malhotra for opening remarks. Thank you, and over to you, sir.
Thank you, Jess. Good morning to all, and welcome to the conference call of the declaration of the second quarter results for the financial year 18-19. With me is Sandeep Verma, President Sales and Marketing, Dilip Malu, CFO, and Kushal, Head Treasury, who also handles the investor relations. The company has closed the quarter with a total operating income of 212.7 crores. The growth in turnover vis-a-vis the second quarter of last financial year is 4.21%. The first half of this financial year has shown a growth of 8.1%. After adjusting the negative impact of GST, the growth for H1 is 9.9%. The EBITDA for the first quarter is 61.9 crores, which is a growth of 3.9% over EBITDA of quarter 2 of last financial year. The EBITDA to sales ratio, which has always been very healthy for Bajaj Corp, is still at a healthy 30%, which is an 84 bips improvement over the last year's second quarter. The PAT and PBT for the quarter are 51.65 crores and 65.83 crores respectively. The highlight during this quarter is that the hair oil industry growth continues to improve its growth trajectory. In the second quarter of this financial year, the total hair oil industry has grown by 7.4% in volume terms, whereas in value terms, this growth is at 16.3%. The difference between volume and value growth are largely due to the growth in the coconut hair oil MRPs. In contrast to the total hair oil growth, the volumes of light hair oil have grown by 13.6%, with the growth being driven by our lead brand, Bajaj Almond Drops, which is growing at 17.7% in volume terms. The good news is that the growth in the rural area for ADHO as well as light hair oil is back. The urban growths are also robust in this quarter at 15.5%. I think the improvement in growth in rural areas portends very well for the coming quarter. Within the sales verticals, modern trade continues to grow at an impressive 23%. The international business, which has been a cause of concern over the last 3-4 quarters, has shown a very good secondary sales growth, and this should see the international business sales turnovers coming back into positive within the next quarter. The concern in CST continues, wherein the decline is at the rate of 45% in this quarter. We do not see a major improvement in this angle because the base itself is dropping quarter after quarter. Improvement in volume growth of light hair oil and even better gains in our lead brand Bajaj Almond Drops has resulted in an all-time high market share of 59.8% in volume terms and 62.2% in terms of value market share. As the trend suggests, the growth of hair oils, especially light hair oils, is continuing, led by a revival in rural growth. During this quarter, we relaunched the new packs of Bajaj Almond Drops. This is the first time ever since the launch in 1989. Almond Drops has had a facelift. The intention of this improvement in the pack design is that we are looking at better improving the brand imagery cues of lightness, nourishment, and strength. The new bottle has gone to the market in September, accompanied by high decibel level advertising and visibility plans. In this relaunch, there has been a special focus on the rupee 10 or 20 ml bottles, with the express purpose of upgrading sachet users into the bottle format. The difference between the offtake and turnover growth is largely due to the drying out of the pipeline prior to the relaunch of the new pack of Almond Drops. In addition, there has been a shifting in the Diwali season from September to October. So the upstocking that used to happen in September last year will happen this year in October. Along with our market share gains, our effort of increasing direct distribution has resulted in an all-time high distribution of our brand, Bajaj Almond Drops. The brand is now available in close to 40 lakh outlets, and the direct distribution is currently at 4.99 lakh outlets, and our aim is to reach 5.4 lakh outlets within this financial year. The increase in distribution is being led by the doubling of our direct rural reach over the last 1 year. Coupled with this, our dependence on wholesale has dropped to 33%, and over and above this, September has seen a very weak sentiment in the wholesale segment, which has also affected the volume this quarter. The second highlight that we have is basically the new pack of Bajaj No Marks has been distributed across the country. Post the launch in June, the offtakes have been very encouraging, and the brand has shown a growth of 32% during the second quarter of this financial year. The sales volumes have shown similar trends, and the domestic sales have grown by 16% in the quarter and 40% in the first half of this financial year. Currently, we have focused on urban centers by creating special task force to come a chemist. During this quarter, we will be targeting the rural areas of one state to strengthen our strategy of improving rural market shares in the anti-mark cream category. In large parts of the country, Nomarks is already a clear number 2 brand, which we will be strengthening over the next few quarters. With the effect of rising crude pricing, all our raw materials and packaging materials have been hit, and therefore the margins are under pressure. To absorb the rising prices, we have taken an MRP increase of 3.48% with the restage of Bajaj Almond Drops in this quarter. Despite this, the gross margin has gone down by 81 bps. In terms of raw materials, light liquid paraffin has gone up 20% Y-on-Y. Refined mustard oil has gone up by 17%. Glass bottles have gone up by 5%. Perfumes have gone up by 6%. The full impact of these price hikes as well as MRP increases will be seen in the third quarter. The current price of light liquid paraffin is close to 80 rupees per kg, though we are still using stock bought at 72 rupees a kg. The positives that have been witnessed during this quarter are growth in volumes of the light hair oil industry, and this growth is being led by rural volumes. Second, improvement in the leadership position of our lead brand Bajaj Almond Drops, with the improvement in both volume and value market shares. A healthy EBITDA of 13% despite strain on RMPM prices. Marked improvement in distribution led by improvement in direct distribution and deeper penetration into the rural sector. Good growth of Nomarks post-launch. Both offtakes and sales turnovers are clocking impressive figures. Focus on getting our rural strategy right to ensure trajectory of market share gains in the anti-mark category continues, and our ability to maintain gross margins by increasing MRP and building stocks of lower price raw materials. We are now open to questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Sir, thanks for the opportunity. My first question is, you mentioned pipeline got dried up because of the relaunch and also because of Diwali shift, also there was an impact. Yeah. So any insights, what could be the impact of both of these?
See, normally, if you take a period of a quarter, and even if you have 15 or 15 days of downstocking, you have a fairly significant impact in volume. In terms of Diwali shift, it would be around 4-5%, not more than that.
And sir, you also mentioned in September the wholesale suffered because of weak sentiments. Could you elaborate on that part, and will it continue in Q3?
See, it's too early to say. As of now, wholesale is down, right? It still continues to be down, but I expect that if the rural growth continue like the way they are, there is no way but wholesale picking up over the next month or so.
And what is the reason for this wholesale sentiments turning a bit poor?
It could be many things. It could be basically they want to downstock and convert their cash into Diwali purchases, because quite a lot of wholesalers shift from FMCG to the Diwali kind of thing. Second could be they are seeing something in the rural areas which we are not yet been able to spot.
So that was a follow-up. You have good exposure to the rural economy. So we are hearing divergent pictures. One is monsoon has been short in parts of the country. And second, of course, is distress is there in farm, MSP, etc., not helping because prices of farm crops are anyway below MSP. So in that context, do you see optimism for FMCG, but negative for bigger value items like two-wheelers, four-wheelers? Is that the view, or even FMCG could suffer after a lag?
See, if this continues and this negativity that you are talking about is real, it will affect FMCG. Now, you cannot contain it to things like durables and vehicles. It will affect us, but it normally takes a little longer for consumer non-durables to get affected or staples to get affected. And the only sign that I see is the weak wholesale demand in September.
So my second question was on CSD. It was down 37% in first half, while in Q2 it was down 44%. So it seems to have deteriorated. Now, for such a long period, obviously customers would have now shifted to other distribution channels. Your modern trade has seen a very good growth, very good revival. So my question is, has that happened? Shift has happened? And second, modern trade growth, what is the specific reason? Third, e-commerce, is it reported separately? As in, is it part of the modern trade, or is it reported separately? If you could share that number.
So one is CSD. I think they are still not sure of which way to go. They obviously want to reduce the quantities being purchased, and you would know that they have a smart card in CSD in which the entitlement of each rank of the army or the military has a particular limit that they have been constraining over the last 3 years, and that is one possible reason. Yes, a lot of that has shifted to general trade and modern trade. I think modern trade has got the slightly higher side of the pie in terms of the shift. The third question was e-commerce. It's included in alternate channels. Currently, it's very, very small, but it's being added to modern trade in our reporting structure as of now.
So how much is it percentage of sales, e-commerce?
It will be less than 0.1% currently.
But do you see that changing, or is it a portfolio issue? For some of the companies, it is already 1.5–2% for the larger companies. Is that a portfolio issue? Or?
It is a portfolio issue, and I think the biggest issue is it's not very attractive for the e-commerce guys also. Because you have a product with a put-down price of 60 odd rupees. The delivery cost itself is so high. So currently there are only a few guys like Big Basket, etc., who are really pushing staples. And as we go along, maybe the other guys will catch on. But we already have a separate task force who's approaching e-commerce, and the growths are very interesting. But they're still a very, very small part of our total turnover.
And the last question, ad spends do not seem to be up that much in spite of relaunch, etc. happening. So is it because of Diwali that it has been postponed?
It's basically, we relaunched late August. So the advertising actually started only in September. So before a relaunch, you basically sort of get off the channels so as to conserve a little bit more money for the relaunch. So September has been very high decibel when the launch happened. But July, August was a dip in our main brand. Our other brands are continued to be advertised in the normal sustenance mode.
Okay, sir. That's all from my side. Thanks a lot.
Thank you. The next question is from the line of Prakash Kapadia from Anived Portfolio Management. Please go ahead.
Yeah, thanks for taking my question. I had two questions. On the rural side, you talked about uneven monsoons, impacting sales. So which part is it, UP, Bihar? And, if I were to look at some of the government schemes in terms of, the health insurance, upcoming elections, so what kind of an offsetting impact that could have in terms of, continuity of rural growth as, the base remains favorable?
That's a very difficult question because one thing you're assuming is the good monsoon will directly affect hair oil growth overnight. That doesn't really happen because the bigger ticket items get a fill-up much earlier than the other smaller ticket items like ours. But I think it's more the enthusiasm or the environment that gets a positive swing because of monsoons or extra money flowing in on account of elections. On the ground, I think monsoons have shown positive and negative impact across the country. I think the negative impact largely is in the central part rather than all across the country. And in terms of the positive impact of elections, we haven't yet seen much of it at this moment, even in the in states that are going into elections now.
Okay, on the ground you don't see that. And on the distribution side, when does the direct reach start having a more positive impact on, quality of sales, continuity of sales? Once we reach, say, 20-25%, obviously we've scaled the distribution reach and, de-risk the wholesale contribution over the last few years. So when does, that start having a positive impact?
Normally the positive impact of direct distribution helps you in range, which means that rather than only selling a few sizes of Bajaj Almond Drops, the range starts getting sold. And not only does Almond Drops sell, but the marginal brands get a better fillip, because you should understand the problem or the flip side of wholesale dependence is only one or two of your fast-moving SKUs go. And therefore, direct distribution effect is seen much more strongly when you start launching your innovation products in the market, like we have done for Bajaj Brahmi Amla, Ayurvedic oil, and to some extent in coconut jasmine.
Okay, understood. And lastly, on the sales side, you did mention, the channel sales. So when do we see, the channel sales translating to company sales in terms of, higher growth? As GST is now out of the base, the taxation and all the channel related issues seem to be settling down. So assuming if, the channel sales are buoyant, say in the second half, that should translate to higher sales growth for us?
Growth, and when we are talking about growth, depends on two or three things. One is the base, right? And therefore you do see these ups and downs and a difference between sales growth and offtake growth, because offtakes don't swing overnight, whereas sales can swing because of things like demon, GST, downstocking, upstocking and things like that. But I think on a like-to-like basis, you should look at a year to sort of try and match primary sales versus offtake. Otherwise, if you do it on a monthly or quarter basis, I guess you'll never see a one-to-one correlation. You'll be very lucky if you see a one-to-one correlation, which would mean that last year the base was stable, and this year also the base is stable.
Understood. And lastly, sir, on the, inorganic side, you mentioned, some bit of this thing we are looking at. So it'll be more on the export side. Anything we are, sensing our valuations, or are things okay on the domestic side, or in case we look at inorganic, it will be more on the international side?
Both. Of course, valuations outside India are much more palatable than those inside India. But I think we continue to look at both angles, because it's not that you have a huge number of targets available and you're going to pick and choose. You sometimes need to focus your attention on international, and our biggest interest obviously is in domestic acquisitions.
Been better than what they were on a relative basis in the domestic market, or still?
Very difficult to quantify these things. Better means what? Valuations are saner? Yes, I think valuations are becoming saner, even in the domestic angle.
Understood. All the best. I'll come back if I have more questions.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi, sir. Good morning. Sir, my question is on the issue of the relaunch and its effect on the pipeline stock, which you mentioned as one of the reasons for why the primary sales growth for this quarter has been a little subdued. So just wanted to understand that a little more. See, your relaunch was in the second half of August. Typically, when you're doing a relaunch, you would have the new product already on the shelf. So the drying up of the pipeline and refilling of the pipeline both should be done by August end. And even if there is some spillover into September, that is also within the quarter. So why should this be an issue impacting the sales growth, sir?
Well, see, I think what you are trying to simplify is that as if we have one distributor all over the country and one depot. So the issue with this is that you have to get a uniform drying out across the country, because it's not that I have one point who can we can dry out overnight and fill up overnight. So you'll have sort of differential stock across the country, and when you launch it and you want to start your advertising, you have to be reasonably sure that the old stock is out, at least from the distributor point of view. So what you normally do is you stop billing or stop producing the old stock sometime in July, dry out your depots and a large part of your distributors within August, and start filling it up towards the end of August or September. Most of the refill happens in September, because by that time, most of the old stock gets out, because it's very detrimental to the new advertising, where you start saying, look, you have a new pack, and when a person goes to buy a pack, he still sees the old pack in the retail or the distributor outlet. So since it's such a large product, you normally have a much bigger dip in your stock. It happened in Nomarks also, and if you remember last time's Concall, we said one of the reasons why you didn't see that kind of a good growth was that we dried it out in April, dried out Nomarks in April and May.
Understood, sir. Understood. So just taking this a little forward, and I think one of the earlier participants asked about this. You have mentioned in your PPT that offtakes at the consumer level are very healthy, in high teens or even higher. So how do we interpret this number? Does it mean that if, let's say, offtakes are 20% now, 2 or 3 months later, the primary sales growth will also be at a similar level?
Percy, again, please remember the offtake figures comes from Nielsen. It is a sample. It is not 100% accurate number, and therefore you should look at trends. And that's why in my con call I keep harping on trends. I think the trends are positive. Both total hair oil is being driven by good growth in light hair oil. So the light hair oil growth with that drop to something like 4% last year is now picking up, and the important part is rural is picking up at a decent pace, because if this continues, you will see much better growth. Whether it's going to be 10%, 15%, 20% is a matter of time will tell you how much of these offtakes will get translated into our growth to our distributors.
Understood. And one more question I have, sir, that basically the price increases that you have taken so far, are they sufficient to offset the cost inflation, assuming that your input costs continue to remain at the current spot prices?
At the current, if it's only rice liquid paraffin, which is currently at 80, we are decently covered. But unfortunately, this is one of the few times that all our RM and PM prices continue to rise. And that, like I said in my opening address, you talk about mustard oil, you talk about glass, you talk about perfumes, you talk about freight. All of them seems to be going up. If it goes up any further, you would have to do a rethink about it. But it's not in the next 1 month or so that we'll have to take a read. We are covered at least at this price.
Sure. So my question, sir, was all these 5 or 6 inputs that you mentioned, supposing if we just take an assumption that all these inputs remain at the current spot prices for the next 2 or 3 quarters, then are we protected as far as margins are concerned?
You won't need it. What I'm worried about is crude continuing to go up, and therefore light liquid paraffin moving up from the current 72 that we have bought to way past 80.
Right, understood, sir. That's it from me, sir. Thanks and all the best.
Thank you. The next question is from the line of Rahul Jha from Bay Capital. Please go ahead.
Hi, this is Nikunj Doshi from Bay Capital. Just a couple of questions. What is the percentage of revenue from ADHO in this quarter and what it was in the corresponding quarter last year?
See, the percentage of ADHO hasn't shifted too much. Nomax is currently around 3.5 to 4% of our total thing. And the total almond drops would be between 92 to 93% of our turnover.
Okay. And we have target of launching one new product every quarter. Have we launched anything new or any new product which is under trial or pilot launch or anything at present?
So this quarter was the restage of almond drops.
Okay.
And, which was a very big initiative we had taken more than a year ago. Because I think you should appreciate that a brand that has been here for so long, if you start playing around with the packaging, you have to do it very consciously and carefully. And I think we focused all our attention on that, and the media campaign that you see now, accompanied by the peripheral support, advertising like visibility or on the social sites or all the activities that we have been doing, is a very intricate thing and takes a lot of time. So we did not launch a totally new brand in this quarter, but I think one of the biggest effect that you'll see is the restaging of Bajaj almond drops.
And for the full year, what will be our A&P target, means as a percentage of revenue?
Again, if you look at our numbers, they would be, the reported numbers are between 13 and 15%, but a part of that actually goes into reduction in the sales volume. So the way we look at it, it should be between 18 to 19% A&P.
Okay. Thank you.
You will not see that. A part of that goes into reduction of sales numbers under the new AS.
Oh, thank you. Thank you very much.
Thank you. The next question is from the line of Sailesh Kumar from Sunidhi Securities. Please go ahead.
Yeah, there are a couple of questions. If you could throw some light on these newer products which are there in the pipeline, which you intend to launch over, say, next 6 to 12 months, that will really be helpful, because we really don't have any sense.
Unfortunately, these things cannot be disclosed, because obviously you're opening yourself up to competition. But having said that, we are looking at largely the first round of innovations happening in hair and skincare before we go into any other segments. And rather than naming, I would say that these are the two categories that we understand and we are further ahead in terms of closing in on these innovative products. Unfortunately, I obviously over a call or even one-to-one, I cannot tell you what products these are.
And do we still sell Kailash Parvat cooling oil?
No, we aren't. As yet, we aren't.
Thank you.
Thank you. The next question is from the line of Bharti Mandara from CD Equisearch. Please go ahead.
Sir, how is your EDHO volume faring pan-India?
93% of my turnover is almond itself. Yeah? So yes, if you look at those numbers, you would probably see the same kind of a thing. If you look at volumes, value growth which are adjusted over the last quarter, you'll see that hair oil for the company volume is more or less flat, whereas value has grown by around 4.5-5%.
So which regions are faring well for ADHO?
See, I think, like you know, our main three regions are North, East and West. And I think the East is doing the best. And I would say a part of North is not doing as well as the rest of the country.
And if you could highlight why is it so? Like why is West not doing that well?
I think it's too much of a long discussion because it depends on three things. One is obviously offtake. Offtake is not different across these regions. Second could be infrastructure, which would mean our own manpower and distribution. Third could be the rural uplifts that you're seeing. And I would say that I think the biggest impact on downstocking and wholesale has been felt more in the north rather than across the country.
All right, sir. Thank you.
Thank you. The next question is from the line of Ankit Babel from Shubhkam Ventures. Please go ahead.
Yeah, good morning, sir.
Good morning.
Sir, first question is, this time we couldn't find the volume details of your products in your presentation. Any reason for not disclosing?
There are two parts of it. One, I actually wanted you guys to ask this question because, see, when you start looking at volume, you start looking at one number, and when you have multiple categories, for example, now Nomarks and skincare is becoming bigger and bigger, looking at one number doesn't really make sense. The second thing is also that in Nomarks itself, we have various categories. For example, if I tell you volume growth of Nomarks is growing at X%, is cream growing or soap growing, again doesn't make too much of sense. So we actually pulled it out consciously, saying that at least you start looking at across segments in terms of value, which is an equitable number, rather than looking at one carton of soap and trying to equate it to one carton of cream, which is more than, 10 times the cost of carton of soap there.
But sir, like other companies, you can at least disclose the underlying volume growth of your products.
This is not too big a problem. I'm saying we have grown at 4.2 and we have taken up 3.48%. So volumes are more or less flat.
Okay. And so my second question was, now sir, it has been around, more than 19-20 quarters that we have been hovering around that 200 crore revenue per quarter and a 50-55 crores of profit. And at the same time, our employee cost has almost doubled. So with no corresponding increase in revenue. So we just wanted to understand when we will come out of this range of around this 200 crores revenue.
I would have loved if I can answer it. But yes, we are doing a lot of things, not only adding employees, but we are adding newer products, our innovation center, we are adding efficiencies in the system. The whole idea is to bump this up to the next level, and that's one important thing we are all focusing on. Whether it will happen now or it will happen a quarter or two down the line, not only depends on us, but also the environment that we are in.
So actually, we really appreciate the efforts you people have been putting since last at least 1.5 years. But actually, we are just waiting for that inflection point that, when results would come. So just wanted to have your view.
Time. All I can tell you is have faith. So we are still working on it, and it's not wholly what's happening internally, it's also a lot of external factors that are not in our control at all.
Okay. And so lastly, just one question. You did mention that the 17-18% volume growth is just on a, based on some sample analysis. But at least you people would also be talking to your distributors, your retailers, that how the growth has been. You would also be mapping something like that. So how is the growth at the secondary or the consumer level from your end?
Okay. That's a good question, because what we have always focused on is primary, whereas secondary is a much closer thing to consumption. Secondary doesn't drop so much, and secondary is significantly higher than the primary growth that you see in these presentations.
Okay. So should we now assume that if now the channel destocking thing is now behind, so suppose assuming if your second...
Yeah.
Pardon?
So that's behind, because, see, it's also something which is natural, but when you start looking at numbers on a monthly or a quarterly basis, you see higher swings. Over the year, this downstocking will not have any effect, because downstocking in August will see upstocking in September, October, November.
So that's what, sir. So as investors, if we have to take some call on your growth rate, so if assuming that this, the secondary market growth which you are expecting, say around high double digit or 18-20%, then your growth will also be in that range?
Over a long period of time. The disclaimer is never ever look at numbers on a quarterly basis. Please look at a longer period.
So we have been looking since last 3-4 years. So we definitely are looking on a longer term only. Yeah. But we just need to understand that if the secondary growth continues at 18-20%, at what time our growth will also match that?
See, you're asking us to do a lot of speculation here. Okay, and since you're asking us to do speculation, I'll tell you the best way to do speculation, which is what Sumit had spoken about earlier. If you look at the overall market growth in the hair oil segment over the full year, the overall market growth in the last, if you take Q1 and Q2 together, is about 11-odd%, 10.5%, around 11-odd%.
Yeah.
And if you look at our H1 value growth, what is our H1 value growth, X of GST? Around 10%, right?
Yeah.
So we are in line with the market growth right now. Entirely. And that's why the whole point that is being made again and again, which is that look at growth, look at whether it is offtake growth or it is, secondary growth. You have to look at it over a longer term period, or even the primary growth. You have to look at it over a longer term period. In Q1, we did a relaunch of Nomarks. Okay, so there was obviously a destocking which was done on Nomarks. Now, Nomarks is only distributed in 2.8 lakh outlets. So it is much easier to get the stock out of 2.8 lakh outlets. Almond Drops is actually the most highly distributed hair oil brand in the country. It is distributed in 40 lakh outlets. Mm-hmm. We don't just need to clean out the stock from the distributors end, we also need to clean out the stock from the retailer's point. Otherwise, like Sumit was saying earlier, you see an ad and you go to an outlet and you see the old bottle over there. Nobody wants to buy the old bottle, so the stock gets stuck. So the cleanup of the stock from the retailer's end is not going to happen as fast as it happened in the case of Nomarks. And hence, I think somebody else was also making the point earlier that, that if you did a destocking in August, then it should come back in September through the upstocking that you do post the launch. So things with such a well-distributed brand, with a brand like ADHO, which is, the most highly distributed brand, don't happen so fast. It's going to take us almost a full quarter to clean up. We can clean up from the distributor's end, and hence the primaries would start coming back a little bit. But till the secondaries start coming back in the same fashion, which means that the stock at the retailer's end has also been cleaned up, the primary growth would not be to that level. And that's why we are reiterating again and again that you look at the volume growth over 2 quarters, over at least 2 quarters. Yeah, and I don't know if this long-winded answer answers your question, but the point I'm making again and again is that look at trends like Sumit was saying, and look at the overall numbers. If you see the overall numbers, you won't find too much of a difference between the offtake trends and the primary trends. And primaries always reflect secondaries because there's no upstocking in any case.
Great. Thank you.
Thank you. The next question is from the line of Rahul Ranade from Goldman Sachs. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Just a quick clarification to begin with. So the price increase we have taken in September is around 3.5%?
Yeah, on almond drops.
On almond drop. And this is over and above a similar price increase that we took in April, right?
No. April, what we had done was in 2 sizes, we had done a size downgrade. From 105 it came to 153 to 50 ml. And took price increases only in 2 SKUs.
Okay.
So 300 and 500. So it's not 3.5% there.
Okay. So effectively that would have worked out to around the similar 4% range?
1% price.
Okay. And just was looking at the offtake data, so I'm still, kind of, if you could help me understand. So the value of take is still lesser than the volume of take if we look at the numbers, whereas we have taken some price increase. So just wanted to understand what the disconnect is over there.
There's no disconnect there. You're looking at a price increase at our production level. And you're looking at volume and value at offtake level. Right? Please remember, between the time we produce and ship to our distributors and the time an offtake to the consumer happens, you've got a long lead time, and that's the pipeline that we keep talking about.
Okay. So how long would that be in duration? Because
we currently look at our distributor stock is just under a month. Our retail stock is around close to 40 days. Right? So even if you do a simple mathematics on average depth of the river, you're still talking about more than 2.5 months.
Okay.
And it doesn't happen. It happens somewhere faster, somewhere slower. So urban it will happen faster, rural it will happen low. And that's why, again, at the cost of sounding like a broken record, please look at trends. Don't look at these monthly, quarterly numbers so deeply.
Sure. And just one final question on the employee cost. As in, again, it has gone up in this quarter. So just wanted to understand what is driving that and where should we kind of expect it to, stabilize?
See, this quarter, we have, for the first time, we have started acknowledging the ESOP's cost, because as per the SEBI guidelines, if you have given an ESOP, you should equate that cost over each quarter rather than at the year end. So that has added. It's not only salaries that have gone up. Salaries have also gone up because of some marginal people that employees that have been added to this system.
Okay. So say from 22 crores in Q1 to 24 crores, the ESOP would be
close to around 80 lakhs.
Sorry?
It's close to 80 lakhs has been accounted for in this quarter.
Okay. Got it. Okay. Yeah. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi. Thanks for the opportunity.
Tejas, I can't hear you.
Yes, sir. Is this better?
Yeah.
Thanks for the opportunity. Sir, just wanted to, I was just going through your presentation, the kind of buoyancy that we have witnessed in Nielsen data, our market share in overall total hair oil volume has moved up by 25 basis point only. So are we saying that this kind of buoyancy, obviously not at this level, but we are seeing at overall hair oil market as well, as per Nielsen?
Achha. If you see the market share, what market share do we put there? Is it a month or is it a MAT market share?
It is a MAT market share, but I'm saying TTM basis, it should be, the traction should be overall basis. That's what I'm asking. So
the traction over the last 12 months is not as much as you see now. You're trying to equate last quarter versus what has happened over 12 months. So market share is, and it's like I was just saying, we look at MAT market share and not month market share. If you see month market share, last month it was 63.1% was the market share. But that's a month. Whereas you're trying to equate the buoyancy in this quarter vis-a-vis 12 months of the preceding year.
Okay, let me rephrase the question, sir. So the kind of buoyancy that we have seen in this quarter for us, would it be, at least trend-wise, would it be the same reflection on over a hair oil market, or is it that LHO driven by our numbers is an outlier here?
That's a good question, yes. See, LHO grew by around 13.6% this quarter, volumes, and we grew by around 17% by volumes. So the delta here, it will get translated into our market share gain, which you are seeing in this quarter. In total hair oil, the value growth is around 16%, right? Which I said in my presentation, which is largely due to the increase in market of YTD 16%, which is seen in the swings of our total hair oil market share. If you look at the total market share of ours, it's not gone up as significantly as the market share within the light hair oil. And for our analysts, we actually put this in our presentation. We are now putting our market share in light hair oil as well as total market share in total hair oils. You won't see that kind of a significant market share shift in total hair oil.
Sure. So second, is there any less than average or more than average inventory at primary or secondary distribution?
Not many. See, again, you should realize we sell on cash. And therefore, why would a distributor increase his inventory or his investment in stock? He would rather increase his investment in market credit or service to the market rather than stock. So, we unfortunately do not have that cushion of increasing distributor stock over a significant period of time. I can do it with a few percentage points of schemes, but that will happen only maybe 15 days to a month, and after that it will drop to the normal level. Yeah.
So, sir, if that's the case, then the 25% growth that in retail offtake that we saw, and I take your point that it is just a sample and it should not be taken in totality, but even in some diluted form of this number, it should show up in primary sales in coming quarters. Is that correct?
That's what I said in my previous question. I said that you have close to 2.5 months of stock in the pipeline, right? Which is distributor plus the retail. Consciously, if I reduce distributor stock over, let's say, a month, in a period of 3 months, you're talking of 33% drop in your volumes. Again, there is again at the cost of being. If you look at a smaller period of time, these swings are very difficult to explain. Right? Over a longer period, you'll see that they even out. Even over 6 months, they even out. No.
Let me just add something over here. In general, there have been many marketeers who have died in trying to marry the offtake growth to the primary and secondary sales growth. So normally what most of the companies do is that they don't look at, they've stopped trying to correlate the offtake sales growth with the primary sales growth. The only thing which most of the companies do is firstly, look at trends. So whether the trends are going up and down, of which the market share is the best indicator. And secondly, whether you are growing, whether your offtakes are growing faster than the market growth or not. Instead of looking at the absolute numbers of 25%, which we seem to be, the offtakes seem to be growing at. What we are more interested in, whether we are growing faster than the market. So the market growth rate is the market offtake growth rate is 21% in quarter 2. We are growing at 25%, which means that over a period of time, over a period of next 1 or 2 odd months, it will start reflecting into market share. So there is no point in trying to completely correlate or do a 1:1 correlation of offtakes with primary. But yeah, as your offtake continue to grow faster, especially than the market, your secondaries, which means if you're not upstocking, then your secondaries will obviously grow faster as well. And if your secondaries grow faster, then your primaries also will grow. So there is that bit of a simplistic correlation, which is the only way we can correlate primaries to offtake. But otherwise, if you're, like I said, if we are growing faster than the market, we are happy with the growth rate because it means that our growths are competitive.
Fair enough. And how's the NPD pipeline looking for rest of FY19 in terms of counts?
I didn't get your point. What? NPD?
NPD. New product development pipeline.
We are far ahead of our requirements, and it's only which product to launch and how close you are to sort of having a portfolio ready in terms of communication, packaging, product, and all that. And probably you should see one towards the end of this quarter or early next quarter.
And the other addition that we have into the NPD pipeline now, with the stabilization of our international business team overall, we've also added international business into our NPD pipeline. So hopefully by the end of this year itself, we will also have one new product coming in the international market, which should help us boost the growth over there.
It will be an extension of current product portfolio or new product for that market?
It could be either. It won't be from the existing portfolio. So I'm not talking about extending the current portfolio of India into international markets. I'm talking about an NPD.
Okay, great. And sir, what will be effective tax rate for this year and next year?
Till 20.2 plus.
Even for next year, sir, looking at whatever assumptions you have on volume?
We will continue to remain in MAT.
See, remember, there is around 1/3 of our production still happens from Guwahati. Yeah?
Okay. And sir, lastly, one request, perhaps I'm speaking for majority of participants here, if not all. Since listing through thick and thin, you have been consistent in sharing volume data, and you have been praised on calls also for your consistency in presentation. So I appreciate the complexity in the business as you are growing, but we'll still appreciate if you can find a way to share underlying volume data, which you have been doing for so many years now after listing.
Point taken, Tejas. And thanks for praising me after so many years.
Thanks and all the best, sir.
Thank you. The next question is from the line of Amit Sinha from Macquarie. Please go ahead.
Thanks for the opportunity, sir. Sir, how has been the trend in the offtake growth in the last 4 to 5 quarters?
I think we have been putting it, and consistently, unlike, let's say, volume data, we have been showing you those trends in our numbers. Yeah. So, let's say growth in volumes. Total Q1 of this year, we were at 10.4% volume and 10.7% volume growth. This quarter, we are at 25% value and 25% volume growth.
In some of the presentation, this data is not there, and that's why I asked this question. I mean, how the trend has been improving in the last 4 or 5 quarters. That is
definitely from 0 in Q3 of last financial year. You're talking of 25% growth now. Huh?
Sure. Okay. Secondly, sir, would request you for some update on your on some of the new launches which you did last financial year, mainly on Brahmi Amla Ayurvedic oil and the Cocoa Jasmine oil which you launched.
Yeah, so let me just start with Brahmi Amla. Brahmi Amla continues to do well on offtake. So we again have a good offtake growth of about 15%. What we are now doing is that we are extending the range of Brahmi Amla. So we are adding more SKUs of Brahmi Amla into our alternate channel business, so into modern trade and e-commerce, which we hope is going to enhance the overall portfolio. One big challenge that we are facing with Brahmi Amla is that CSD, which used to be a big customer of Brahmi Amla, there we have sort of come to complete zero over there. And that's why the primary numbers on Brahmi Amla, are hit on account of that. But like I said, on offtake front, it is still growing at about 20%, and we are trying to get a lot of the volumes that we've lost in CSD through modern trade by increasing the range over there. Then the other brand which we launched in February of this year was Cocoa Jasmine, Bajaj Cocoa Jasmine in Maharashtra, which is again, hopefully we should be able to meet our launch parameters this year. Right now, this is big season time for Maharashtra. So we are doing a big pressure test, what we call a pressure test plan in Maharashtra, where we are going, with full 360 and a very strong consumer offer. So going across all fronts. The big learning we've had in Maharashtra is that we've now managed to identify specific SPRs or specific districts where we believe, we can spend a little bit, where we believe we can invest a little bit more and get a better bang for a buck. So we are focusing on those specific districts, rolling out this pressure test plan, and then trying to create a repeatable model which we can then implement in all of Maharashtra by the end of this year, and then hopefully extend cocoa jasmine to some of the other states where perfumed coconut oil is becoming a big category. So that is that's the summary on both the new launches we've done in the last 1 year. Nomarks and, Sumit sir spoke about already.
Yeah, very clear. Thanks a lot, sir.
Thank you. The next question is from the line of Jinal Sheth from Multi-Act Equity. Please go ahead.
Good morning, Sumitji. Just to clarify, slightly confused between the comment, has the restocking been already done?
It's in the process. Like Sandeep pointed out, and before that I tried explaining, with such a widely distributed product, it takes much more time in restocking the whole thing. So it started in September. I think it will continue in October and maybe early part of November.
Okay. I think that's about it. Thanks a lot.
Thanks, Jena.
Thank you. The next question is from the line of Saurabh Kundan from BNP Paribas Mutual Fund. Please go ahead.
Yeah. Hi, this is Kunal Vora. Sir, on the ADHO relaunch, because of, there could have been some temporary stock out. Do you think there is some loss of sales because of temporary stock outs? Can there be permanent impact?
It could happen because even it's such a big country that you can't uniformly destock and restock everywhere. So you do run a risk of getting out of stock in a few places. That could happen.
Yeah, see, in general, if you do a relaunch of a mass consumer brand, then there could even be a dip in the market share for that month or even the next month, because there is a loss of sales. These are all low involvement products. So, a person who wants to use a hair oil will use a hair oil. If your hair oil is not on the shelf, she will move to some other light hair oil. So that bit of dip is expected to happen.
See, even if you look at the restage of Nomarks, and if you go back and look at market share, it did before the launch really took off. And here also September offtake, if you take only September, you did see a minor dip because of the downstocking.
Okay. And second question, how's been the feedback to your 10 rupee PET jar? And is there a risk that the customers could downtrade instead of uptrading from such a?
Not really, because it's not that convenient if you're a regular user. If you're a sachet user, it's a little more convenient, or if you're traveling, it makes sense. But a person, let's say, who's a 100 ml user won't move to a 20 ml definitely.
Okay, that's it from my side. Thanks.
Thank you. The next question is from the line of Neerav Raji from B&K Securities. Please go ahead.
Good afternoon, sir.
Good afternoon.
So I just need one clarification on the volumes. We mentioned around flattish for this quarter, but does this include the CSD and the IB business also?
Everything. Yes, included.
Because the like-for-like growth is around 1%, so flattish volumes would be around, so pricing would be around 1%, but we have taken around close to 3% this quarter. So.
Not quarter. Only September it came into it.
Okay. And any update on the international business, when it could start generating revenues?
I think I told you that secondaries have already started growing at a good pace, right? And primaries would most probably be turning around in this quarter itself.
Okay. Yeah. Thanks a lot, sir.
Thank you. The next question is from the line of Aman Batra from Goldman Sachs Asset Management. Please go ahead.
Hi, sir. How are you?
Very fine, Aman.
Good. So just wanted to understand this 10 rupees SKU in more detail, because this was an SKU which was always there for you. So what's the relaunch about, and how we going to promote it as such? Are we advertising specifically for it, or what are we looking at it?
See, Aman, yes, you're right. It was already always there. The issue with this was we had this in glass earlier on, and because of which we hardly made any profit on this product, and therefore whenever we tried to push it through, we didn't really support it well enough. So now what we have tried and done is we have moved away one from the flow wrap. It was actually put in a laminate and hung. So this time what we have done is we have put it in plastic jars, which make it more visible and much more attractive to the retailer, because what he does is he sells all the 20 ml 10 rupee packs and uses the jar for stocking other things in his portfolio. We don't advertise for 10 ml because it's not that widely distributed, but we do point of sale display material to attract consumers who basically come to buy sachets and get them to move from a 1 rupee to a 10 rupee sachet.
Understood.
To a 10 rupee bottle, sorry.
Understood.
Also, one of the challenges which we figured out, which we learned through some consumer work, was that when we put it in the flow wrap earlier, and the reason we put it in the flow wrap was because we said we should hang it like a sachet itself, so that it's always right next to the sachet. Now that was a good thought in principle, but didn't work out because the consumers never understood that there was actually a bottle inside the flow wrap. And consumers typically tend to see inherent value in a bottle versus a sachet as such. So that's why we just took it out of the flow wrap, which also, which made the bottle very clearly visible to the consumer. And it also helped us to reduce some costs on the pack itself.
Wonderful. Okay. Thanks a lot.
Yeah. Thanks, Amar.
Thank you. The next question is from the line of Anubhav Sahu from MC Research. Please go ahead.
Hi, sir. I wanted to understand what is the distribution mix we are targeting. I think for wholesale you mentioned, I think we have around 23% of exposure. Could you also comment on what is the trend on the wholesale side? Say 1 year back before GST, what was the share we were having from the wholesale? And is there any ideal mix which you are targeting in terms of direct versus wholesale?
See, to answer the last part, there is no ideal mix. It depends on your product and it depends on uptake of your product. If your product isn't being picked up in the market, wholesale really is not there for you. But coming to pre-demon, actually the downturn happened in demon itself because the wholesalers normally make money in cash dealings and not by paying tax. So it used to be around 54-55% of our total sales at that point of time. Now, thanks to the external factors and also our endeavor to increase direct distribution among the larger outlets, it's gone down to 33%.
Okay, 33%. Okay. And so in terms of direct reach, what are we targeting? I mean, in terms of...
Yeah, I made a point in my opening address. We are targeting to hit 5.4 lakh outlets by the end of this financial year.
And what is it now, right, sir?
4.9. It's there in the...
4.9 to 5. Oh, okay, fine. Got it. Thank you, sir. That's all.
Thank you. That was the last question in queue. I now hand the conference over to the management for their closing comments.
Thanks a lot for getting in on the Concall, and if you go back and see, a lot of questions was on trying to equate Nielsen data with primary data, and all I can say is that yes, even when I started my career, it used to be really confusing on the fact that I could never equate primary with offtake. And my only contention is please look at a longer period, and all of you are long-term investors in our company, and therefore over a long period you'll see both of these tallying, and the confusion that you have today, it shouldn't be there. But thanks coming in and a very nice conference call that we had today. Thanks a lot.